Good, happy Monday evening, everyone. I'm Riley King, and welcome to Behind to Business News with Riley King. Let's get started. First up, let's take a look at your markets right now and see where they closed at for this evening. Here's a look at your markets right now. Your Dow Jones Industrial Average closed in the green and went up. Your S&P 500 Index closed in the green and went up. Your Nasdaq closed in the green and went up. Our USS 2K closed in the green and went up. And VIX closed in the green and went up. Trump trade lifts stock to more records as S&P reaches $20 trillion in market cap. Let's take a listen to this video from CNBC.
Checking into the penthouse. The name's Hunter.
I don't have a Hunter.
But you emailed the confirmation to my watch.
Well, marketing handles emails. Oh, I have a Hanson.
I picked my room on your app.
We have so many apps. I do have a single on the ground floor, though, if you'd like, Mr. Hanson.
It's Hunter.
Always good to be patient, right? But I mean, if you look at a chart, a 3-month chart of the S&P 500, it's definitely impressive. This is a very sturdy rally. We broke about, let's say, 2/3% into new high territory last week. 2,300 has been a level that capped the market for only about a couple of weeks. And this has also suppressed volatility. The VIX index, as everybody's been talking about, down around 10 or 11. That's really more of a function of how calm the market's been as opposed to being, an outright warning sign. So what I'm basically taking a look at is whether this is a rally at these levels with these conditions that's worth chasing. One thing about that long period of calm I mentioned, we've gone 84 straight trading sessions without a down 1% day, longest since 2006. Before that, it was the mid-90s. One thing I will mention about that is those long periods of calm in the past have not been at the very peak of market. So it's not as if this is a sign of an important peak, but the next substantial move is often a little bit of a shakeout to the downside. Also, people talking last week, even bullish investors, bullish commentators talking about a little bit of a thinning out of the market. This has not been an all-inclusive rise. Last week, we actually saw less than half the volume. On a couple of days, we hit a new high, was in advancing volume. So these are tactical indicators. Also, the macroeconomic surprise indexes that have been a tailwind. Basically, economic data globally has been outperforming forecasts. That's perhaps about to flatten out or roll over. So basically, the question is, if you care about the next couple 3%, it's not up and away from these levels based on a lot of these indicators. And specifically, guys, what I'm seeing is bullish investors, people who have high targets like 2,600 on the S&P 500 saying probably flatten out or down from here in the next couple of months, at least by a lot of these indicators.
Okay, and there you go on that report. And that does it for business news right here on the Riley King Network. I hope you all have a great rest of your Monday evening. Good night, everyone. Bye.